They're lying about Bitcoin. You've seen it in the headlines, the panic on X, and the endless posts saying the run is over. Every talking head on mainstream finance is repeating the same story. Bitcoin's in trouble. The money's leaving, they say, and this cycle is finished. But they're lying, because what's really happening right now, and that's what we're going to get into in today's video, is one of the biggest power shifts in modern finance. And it's not loud, and that's by design. It's quiet, strategic, and already in motion. A wave of capital quietly migrating on-chain, while everyone else freezes in fear, as they want you. So the real question isn't why Bitcoin's dropping. The real question is, who's buying while everyone else panics? So that's what we're talking about today. And without further ado, let's get into it. So we know we can all feel the exhaustion in the air. It's palpable. Timelines are full of traders calling for lower lows. We see analysts on CNBC sounding confident in saying that it's over. Everyone's convinced this correction means the cycle's done. Obviously too short-sighted. So let's take a look at where we are. Right now, Bitcoin's trading around $102,700 or so, down almost 10% this month. That's true. We also see that the crypto fear and greed index has plunged to 26, deep in the fear territory. The charts look heavy and sentiment looks and feels shot. But this setup, fear on the surface and quiet accumulation underneath by those who know what's going on, is the same one that's marked the start of every major liquidity wave in Bitcoin's entire history. And now here's the part no one is talking about. The same institutions telling you to stay cautious are quietly expanding themselves, their own positions, wiring new capital into ETFs, and building the next version of finance right under everyone's noses. They create the fear, and then they use it as a cover so they can load up on a discount. And when we dig into the data, the story changes very fast. Public companies now hold more than 1.05 million Bitcoin on their own balance sheets. That's the largest total on record, and it's still growing. The interesting part is how ownership is shifting. Strategy, Michael Saylor's company, used to control 75% of all corporate Bitcoin. And now it's closer to 60. That means new firms are quietly stepping in, spreading that supply across more balance sheets than ever before. And even governments are part of it now. The United States holds somewhere between 120,000 and 170,000 Bitcoin. And the UK holds around 61,000 and Ukraine around 46,000. We see countries like Bhutan, El Salvador, and the UAE have confirmed national reserves as well. So these aren't fringe moves anymore. This is sovereign adoption because they understand what's happening. It's a Bitcoin money grab now. And if we zoom out, the picture becomes even more clear. Over 50 new digital asset firms have launched across 15 countries since the start of 2025, rising more than 15 billion in combined capital. And each one is doing the same thing, structuring corporate and institution balance sheets around Bitcoin and crypto. So while retail sentiment looks broken, the hard numbers say accumulation never stopped. The difference is in who is doing the buying is all. It's not the crowd anymore. It's not retail, the 99%. It's the institutions, the corporations, and the governments. It's those same groups that are setting up their own positions and buying more and more as much as possible because they understand the great financial transfer of wealth that is happening in the world right now. The dynamic and setup for it anyway. And they do not want to get left behind. They do not want to lose their power positions. But all right, now let's get into what's really powering this market. Behind every correction, behind every stretch of silence on the charts, there's a liquidity machine running underneath. And right now, it's working overtime. ETF data proves it. More than 1,400 US institutions have disclosed over $25 billion in spot Bitcoin ETF holdings. And those inflows have not slowed down, even as the price has pulled back. If anything, they see it as another reason to buy even more. In fact, if we zoom in even closer, we see that they have already outpaced new Bitcoin issuance, meaning funds are absorbing more supply than miners can even create. That is structural demand. And it's not just Bitcoin. The foundation of this whole liquidity network is built on stablecoins, the digital dollars that connect every part of crypto to the traditional economy. The total stablecoin supply has now climbed to $275 billion, up 64% year over year. And lifetime volume has crossed $61.7 trillion. And we see Circle, the company behind USDC, has reported $740 million in Q3 revenue and $214 million in profit, more than triple last year's numbers. Those profits come from interest earned on US treasuries backing USDC, meaning the more money moves on chain, the more the system pays itself. And stablecoins have quietly become the settlement layer for this new era of liquidity. BNY Mellon and State Street handle custody. Visa and Stripe integrate payment rails. Ethereum, Solana, and Tron move the transactions. It's the same global dollar network, just rebuilt to move in real time, faster, cheaper, and open 24/7. So when people say liquidity is drying up, they're looking in the wrong pipes. The old ones might be clogged, but the new ones are wide open. And everything's flowing straight into this on-chain system. And the banks that said never, they would never consider Bitcoin an official legitimate asset and they would never dabble in it, are now building in it. And who exactly said this? Who are they when I say this? I'm talking about the same banks and institutions that once called Bitcoin a bubble. For years, the biggest banks laughed at this space. They said Bitcoin would never compete with the financial system they built. But now they're rebuilding the same system on blockchain rails. And we see that JP Morgan has already processed over 1 trillion in transactions through its private network. And Onyx using a programmable deposit token backed 1-to-1 by real dollars. So we see what started as an internet plot, magic internet money, is now a live settlement network for some of the largest corporations on the planet. This token moves money instantly across borders, bypassing SWIFT, and it's completely interoperable with stablecoins. That means the same banks that used to block crypto payments are now building the tech that runs them. And it's not just JP Morgan. Across finance, every major institution is setting up an on-chain strategy. Goldman Sachs is working on tokenized money market funds. Fidelity and Franklin Templeton are anchoring ETFs directly to blockchain settlement systems. These are not experiments anymore. They're upgrades. The rails are changing beneath the surface while the headlines act like nothing's happening. And the same people who once called this market speculative are now designing the infrastructure that keeps it alive. They're taking the lead. That's why fear in this phase always feels so convincing. And this time all the more because the actors are larger and their moves are larger. And I believe there may be strategic manipulation, price suppression to make sure that they can accumulate as much as possible for as long as possible. But they cannot suppress it inevitably because Bitcoin has a limited supply. So ultimately, its price will spring forward. And we see the real shift doesn't start when prices go up. It starts when the institutions that run global money decide to move their operations on chain. So when I say, or when I said in the intro, they lied about Bitcoin, I'm talking about the gatekeepers, the analysts, the fund managers, and the financial media that repeat the same bearish scripts every cycle. There's nothing new here. They say liquidity is leaving when it's being restructured in actuality. They say institutions are out when the data shows they're deeper in than ever before. They're building it. They're leading the way. They lied because their model depends on controlling the narrative. They need you focused on short-term fear so they can focus on long-term ownership, as should you, as should I, as should all of us. Because remember, everyone that can own at least 0.01 Bitcoin will be the next 1%, financially speaking, of the world in the near future. So that's all you need to focus on. They don't want you. They don't want retail, the 99%, competing for the same assets they're accumulating because they understand whoever can own as much Bitcoin controls the future. And now, even their own leaders are admitting it. Joseph Chalom, I hope I said that right, a former BlackRock executive, said it clearly last week. He said Ethereum is the infrastructure for Wall Street, and his firm, SharpLink, is holding over $3 billion in ETH and staking it through regulated custodians. He calls it productive capital, capital that earns yield, secures networks, empowers the next financial layer. This is the part of the story the headlines never show and don't want you to know. Because when a former BlackRock executive says Ethereum is the foundation for the next phase of global finance, that's not an opinion. That's a declaration. That's an educated statement. This means the same financial world that rejected crypto is now rebuilding itself around it. So yes, they lied about Bitcoin, about what it is, what it drives, and where it's going. And you should know this. And the truth is, this market isn't driven by retail hype anymore. I've been saying that for several videos, for several months actually. I've been saying that almost since right after the ETFs were legalized, that this bull run would look different because they would be the new big players in the playground, the new whales. So now the market is driven by a financial system migrating to a new foundation, one that no longer belongs to them. So they're trying to suppress the price as long as possible so they can accumulate more of what will run this market. Bitcoin and all the infrastructure blue chips that are the new railways for this new financial era, for this new future that is here now. So as we close out today's video, remember, they lied about Bitcoin and they will continue to keep you distracted while they can accumulate more. And they're telling you to be afraid. They're telling you to wait. They're telling you it's over. But the truth is the market is already moving. Quietly, strategically, it will not look like past cycles. So just accept that, okay? Brace yourself, put your life jacket on, put your parachute on, whatever it is you have to do symbolically to be ready for the turbulence, because that is here, okay? We're all going through it right now. And there will be more. But Bitcoin ultimately goes up to $1 million. And strategic blue chips that have real use cases like security tokens, as we talked about yesterday, infrastructure tokens, Solana, Sui, Chainlink, though I should probably go do a little research on what's going on with them. So I'll be back to you with that update. And Ondo, I think we should cover our past blue chip tokens to make sure that they're still advancing. But the truth is, as I'm saying, as Bitcoin makes its really long, hopefully not so long, because we did hear, I think it's Eric Trump saying that he thinks Bitcoin will go up to $1 million by the end of Q4. That is a huge, outlandish, enormous statement to make because we know Bitcoin ultimately goes up to $1 million, but we don't necessarily have reason to believe that it will go up to $1 million by the end of Q4, right? That's like here upon us in the next month. But for him to say something like that as the son of the president, whom you know goes through rigorous PR training, that is obviously backed by something, right? So I'm not saying this will be the case. I'm just saying it's interesting someone like him with the responsibility he has would have said that. Anyway, the point is Bitcoin will go up to $1 million. Hang tight. In the meantime, strategic blue chip tokens, those that are part of real infrastructure use cases that the world needs, that finance needs right now, will go up with it. And every ETF inflow, every stablecoin transaction, every new treasury wallet is part of this journey, part of this migration. The liquidity that once powered Wall Street is being reprogrammed into code. And that's what's really happening right now. So when you see another red day or another red headline, as I was saying, predicting Bitcoin's collapse, remember, anchor this moment in your memory and remember this is strategic to get you scared, to get you to sell. And just remember what data is actually showing us. And if you forget, just come tune in here to my channel, because this isn't collapse. This is a reset. It's the foundation for the next phase of adoption, where governments, corporations, and institutions are no longer fighting crypto. They are becoming it, and they want to control it, which means keeping you at bay for as long as possible. And if you already understand this, you're already ahead of the 99% out there. And all you have to do is not mess up. Don't sell. Anyway, that's a wrap for today. So if you appreciated today's video, the information, the data, the explanation I just asked, you like the video and share the video with somebody who needs to understand what is going on. Who's the puppet behind the show, pulling the strings? I love you guys so much. Stay sharp, stay plugged in, stay steady, and I will catch you guys here tomorrow.